Hey, what's up, everyone? Good morning. Happy Thursday, July 20th. I hope everyone is doing well today. We are in Greece right now. As you can tell, it is the hottest place in the world. I don't know how hot it is here, but I am not doing well. So we got some AC. Everything's going good. What we're going to do today is talk about some of the news. We had some earnings last night. We'll talk about the market. We'll talk about some of the positioning we're looking at, some of the positioning we took last night, and how well we're doing. So let's break this down. Let's go over what we got cooking today in terms of news. So first and foremost, right, we have two main things to talk about. We have FEDNOW, which is going to be a modernized and antique U.S. banking system that the Federal Reserve is about to launch with new instant payments. It's going to be available 24/7, 365. So it'll be initially supported by 57 organizations like the Bank of New York, Mellon, BK. We have JP Morgan Chase, JPM, Wells Fargo, WFC, US Bank Corp, USB, and there are plans to onboard more lenders and credit unions in the near future. So FedNow, which has been in the works since about 2019, will also bring the US in line with other countries that have similar services in place for years, such as Brazil, the EU, India, and the UK. So currently, it can take anywhere from a day to many days for cash payments to settle in order to verify the transaction, account amounts, and clearing of the funds. Under FedNow, all these steps would happen instantaneously, completing similar private sector real-time payment systems like the clearinghouse's RTP network, and the central bank previously rolled out a FedWire service, but that is mainly reserved for big corporate payments and is only operational during business hours. FedNow will help everyone from consumers to small businesses settle directly via central bank accounts, unlike closed peer-to-peer networks like Zelle, which is based off JPM, and also Venmo, which is from PayPal. So PayPal is about to face serious competition at an infrastructural level it can't compete with. Meanwhile, John Mason forecasts the U.S. banking system will become smaller with fewer small and mid-sized banks due to the technological advancements of the FedNow system. So investments will be centered upon who is managing the transition the best, right? So this is in the new era for commercial banking. Some of the concerns about this: FedNow does not give the central bank outright access to consumer banking accounts or the ability to control transactions. In theory, it could make it easier to do that, but the US government already has the ability to turn on and off account or freeze assets. So FedNow is also not intended to eliminate any form of payment, including cash, and there would be probably an easier way to go about that, such as issuance of central bank digital currencies. In other news, the main thing that we were looking at over the evening session and in today's session that's affecting the broader market realistically is going to be the earnings reports that came out. Netflix and Tesla earnings. These were the first of many of tech earnings that came out last night, and they've been the center of attention for this most recent drop that everyone's calling the current top, right, potential downturn in the market. Netflix dropped about 8% after hours on Wednesday on a mixed earnings report and a soft revenue guidance, despite a ramp up of new subscribers and a company pivot going according to plan. At the same time, Netflix may be in a better position than traditional studios in terms of disruptive double strikes in Hollywood, given different production timelines and long content pipelines. So, with regards to its account sharing plans, Netflix said the cancel reaction was low, and it's seemingly healthy in terms of conversion or borrow household into a full paying membership. Right now, I'm not necessarily 100% sure where Netflix is trading. I'll take a look at it, but Tesla also reported some interesting results. Netflix is down substantially. It closed yesterday around 477. It's down to 449, being down about 6% or so. So fairly significant downturn, down about $28 or so, and we'll see if that continues. Especially if the market starts turning today, it's gonna pull this even lower. Tesla was one of the other names over here that got a decent little beat down in the market. Tesla is now down pre-market from 291 down into 278, putting it down about 4.5%, down nearly $13. Traders and investors alike were kind of disappointed from Tesla's Q2 results, although it took some time to drive in a specific direction. Shares were initially unchanged after the EV maker's numbers topped estimates, but the stock then fell about 4.5% after Elon Musk hinted at more price cuts if market conditions became unstable. So he also referenced slight decrease in Q3 production and did not give a specific timeline for the Cybertruck launch, which has been in the works since 2019. So though Tesla, in its early talks with the automakers to fully license full self-driving software, which could boost its margins. So investing group leader Jonathan Weber turned bearish on Tesla after the result due to the underlying margin picture, but many subscribers are hashing it out in the comment section based on what's going on. Many shareholders trying to take a look at this. I think overall Tesla might tumble maybe a bit more, I would say, into, let me just take a look at this. Like if the market generally pulls down, like if Tesla pulls down into 220, between 220 and 245, I think that could be a decent buying opportunity. Like I said, I'm in the buy the dip zone. I've been looking for a buy the dip market for a very, very while, I would say a while right now, past few months. And I think right now we are topping out. But the bears, if we talk about the planning for the S&P 500 futures today, the bears, they do have a lot of work. They have to really pull this down today and tomorrow, considering seasonality should top out by the end of this week. So what we're looking at right now, we're looking at a fairly strong market. Realistically, we have a very strong area at 45.82 to 84 on the S&P 500 futures. Around those low 80s, price would have to start breaking to the downside for the bearish sentiment. Right, that's the only way. I admit that the bears are going to be strong. They're going to try to push this down, is if we can offer under that area, and not only that, but re-offer under 45.72.70, right? If that reoffers today and we start running into these areas, into the mid 60s, mid 50s to the downside, then we have a real potential turnaround. Otherwise, if we continuously hold this low 80 or even the low 70, I think that a bounce can ensue maybe into the end of the week, where Friday we could look for some sell. So that's my general plan on the day, talking about the S&P 500 futures, going through some of these earnings reports, so on and so forth. So that's what I have today. We're going to open up our futures trading room, right? We're going to go through that and go through plans and trades with everyone, talking about the S&P 500 futures mainly, right? Maybe some NASDAQ, so on and so forth. In terms of the FEDNOW system, let's see. Let's look at the FEDNOW launch. I haven't seen a specific date. Realistically, they're talking about a launch. Set to launch, 41.71, a billion banks. The launch is imminent, as I'm seeing everywhere, quote unquote imminent. Is there a date? Not necessarily, but imminent. So that's all I have. It could be today, it could be tomorrow, it could be next week, but it's imminent. So I have no idea. Let's see what happens from there. I hope everyone has an amazing trading day. Tomorrow we have OPEX. Speaking of OPEX, I'm not going to be around. I'm not doing that. Whatever happens, happens. But I'm not going to be looking at OPEX. So I hope everyone has an amazing weekend. I hope everyone did well today and checks us out at TRADEPROacademy.com. So I'll see you guys there, and let's do this again next week.